everyone, it's JD Asajan. Welcome to another episode of FortuneBuilders.tv. If you're watching this show, you're actually watching the first show of 2013. Now, if you watched the last show of 2012, you knew that I put an outcome out there, 50 shows for this year, and Dave and I are on board. Dave, of course, every week is with me behind the camera. So this is number one, and we're starting off a little late. I wanted to get the show done a little earlier, but you know what? We're not going to cry over spilt milk. We're getting it going here. And what I'm going to talk about today, real briefly, because there's a download for you below this video, is the Mortgage Forgiveness Debt Relief Act. Some of you may know what that is. Some of you may not know what that is. It was something that was implemented in 2007 so that people that were forgiven debt through, for example, the short sale process, meaning they were able to sell their house below what the mortgage was and the bank agreed to it, that difference, that mortgage amount that was forgiven, they weren't responsible for paying taxes on it at the end of the year, in most cases. And for those of you that know, that was set to expire at the end of 2012. It was a 5-year deal, and it was supposed to expire on December 31st, and a lot of people were concerned, certainly because a lot of people are over leveraged, meaning they owe more than their house is worth and are going through the short sale process. And what that meant is if that didn't get extended, that debt amount that they were forgiven, they would have to pay taxes on that at the end of the year. Well, fortunately, on January 2nd, the Congress agreed to extend that for another year, which is a big deal. A lot of investors, ourselves included at CT Homes, and a lot of our students in the Mastery Program and a lot of investors I talk to across the country are dealing heavily with short sales now because it's a great opportunity not only to help people, but to create equity in deals for us. So that was extended, which is a big deal now because in the mind of the homeowner, they're going to be more comfortable going forward with a short sale now because they won't have to pay taxes on the debt that was forgiven. Now, I'm going to encourage, as I always do with those kinds of matters, that the investor, or excuse me, well, the investor, if they're doing a short sale, and certainly the homeowner, you should encourage your client to seek out, professional advice from their accountant and other professionals, right? And make sure that that's not something that they're going to have to deal with in terms of taxes, depending on how they file. But that's big news, and it also covers, for example, any sort of loan modification or principal reduction that a bank may grant a person that has borrowed money and owns a home. So it's a pretty big deal. Not a pretty big deal. It's definitely a big deal. There was a lot of concern, and at the end of the year, we experienced it in our office at CT Homes, where a lot of people were pushing to close by the end of the year, and we closed. Oh man, 4 deals in like the last 7 days of the year, all short sales, because people weren't sure if if they extended into the new year, if they're going to be responsible for paying taxes on that. And sometimes that amount, 50, 60, 100, I've seen it on higher end homes in the high 6 figures. So that's a pretty significant amount of money that someone could have been responsible for paying taxes on. So that's good news. And there's more information below this video for you to read about, and a couple of links that you can check on just to get more educated. Okay, so good news, and what I'm going to spend more time this year on, besides the quick tips that we do, and we're going to go on site some more, is to keep you abreast of what's going on out in the investing world. All right, so appreciate you watching, and you're going to get some value out of this show and downloading the attachment if you take the time to do it and read it. All right, so our next segment is our deal or no deal. Wow, I got hung up there, Dave. Deal or no deal. So we're gonna go right into it.
Deal or no deal?
So deal or no deal is staying educated on what's going on in the marketplace. Not only property values and the types of things types of deals that are working in the marketplace, the types of leads that are becoming more profitable or most profitable, which I'm going to teach you about throughout the course of this year more, but also just being knowledgeable about what's coming down the pike in terms of government regulations and changes and things that affect us as homeowners. For example, in California, just recently, they enacted legislation that's going to require homeowners to notify tenants if they're being foreclosed on. And that wasn't always the case. There would be situations where a homeowner would be foreclosed on their home. They wouldn't own it anymore. There'd be a tenant in the house, and the tenant had no idea, which sucks, and it's not a good situation for the tenant. Now, in California, for example, the owner of the home is going to be responsible and required to notify their tenant. So that was just enacted. We'll see how that goes throughout the year, and I'll keep you updated on that. That's just one example. So we're going to keep you educated this year on FortuneBuilders.tv, more about some of the rulings that are coming down the pike with our lobbyist group in Washington, the Distressed Property Coalition, and John Grant. So it's going to be good times, so stay tuned. Our last section is, of course, our quote of the week.
Quote of the week.
So our quote of the week, I was thinking a lot about it, first show of the year, and kind of where my head's at right now. And what came to mind was, the journey is the reward. And it's actually one thing that I tell myself every day. I've got a couple of mantras that I tell myself in the morning before I do anything, right when I get out of bed, and that's one of them. And it really, and why I'm thinking about it actually quite a bit is a couple of days ago, my in-laws are in town from Brazil. My wife's Brazilian, and my father-in-law, we had to take him to the hospital. And I'm sharing that because in that moment, it didn't matter like how hard we work or the things that we have accomplished up to this point in our businesses. What mattered was family and the amount of time that I had spent with them, or unfortunately have not been able to spend with them because they're in another country. And so I was thinking about that because it just happened a couple of days ago, and I thought I'd share with you to work hard, but enjoy life. Don't miss out on the things in life that are valuable. And as we start the year out, there's going to be a lot of experiences that we're all going to go through this year, right? Working hard. And when you like what you do, you don't really call it work because you enjoy it. And that's a great thing. But I'll add to that if you miss out on some of those unique things that happen along the way as you're moving towards your goals, you will miss out on certain unique situations and experiences that can be as rewarding as that ultimate outcome. So spend some time thinking about that as the new year starts here, and understanding that at the end of the day, the reward really is the journey that we go through in life, and the experiences that we have, and the relationships that we make, and that's an important thing. All right, so appreciate you watching as always, and as we get started this year, I'm really excited about Fortune Builders TV and what we're going to do this year with the channel and some different things that we have planned. So appreciate you watching the show. Be sure and download the attachment for some more information on the Mortgage Forgiveness Debt Relief Act that was just extended for the next year. And we'll see you on the next show.